Hey, what's up, everybody? It's Wednesday, October 9th, and I'm here in Pompano Beach, Florida, on the east coast of Florida. As many of you know, if you've been watching my videos, I had to evacuate from my home in southwest Florida. I was in evacuation zone A, so that was the most vulnerable. We were the first ones. A and B were the first ones evacuated. I don't even know if my home is going to be there when I get back. Whenever I get back, I have no idea. It could be completely flooded out. They're calling for an 8 to 12 foot storm surge. And my house is at a 10 foot elevation. Florida's pretty flat, so you really don't have any elevation here. I mean, 10 feet is already something, but you know, if it goes to what they're calling for, I mean, my house is going to be flooded. So as you can imagine, it's been hard for me to really focus on the markets. Today we had another big run up in stocks. We had FOMC minutes were released from the last meeting, and everybody was pretty on board for a 50 basis point rate cut. Right now the markets are starting to price in no rate cut at the November meeting. I personally think that this bond sell-off since the September 18th rate cut, I think it's hysterical, number one. Hysterical, not as funny, but hysterical in the sense of people just, freaking out and panicking. But really what it is, I mean, if you look at the breakdown of where the selling is coming from, it's coming from speculative funds. It's not coming from institutions. Actually, institutions have been buyers of treasuries. We had a good 10-year auction today. And banks have been adding treasuries to their holdings now for weeks. I mean, I think bank holdings of treasury securities is at the highest level in 22 months. All right. So, I mean, there's definitely strong institutional demand for treasuries. And if you look at the breakdown in the CFTC commitments report, I mean, large speculative funds hold a record short position. You know, yeah, they could push the market in the short term, but I mean, in the longer term, medium to long term, it's about economic fundamentals. And I come back to, first of all, I'm not buying into this prospect of a resurgence in inflation. We could have a little bit, we had a little spike up in oil prices, but that's come back down. But I think we could probably see another rebound in oil. Today we had the EIA weekly petroleum status report, and there was a big drawdown in crude inventories. There was a big drawdown in gasoline inventories. Demand in gasoline was way, way up. Demand in distillates was way, way up. But a lot of that is storm related. I mean, you guys know, if you've been following the news, like gas stations are running out of gas. I had a hard time finding gas when I had to evacuate from my house. I'm over here on the East Coast where there's no threat. Well, we have a storm, a tropical storm warning here where I am, but there's no threat of like a major, major hurricane here like there was on the West Coast. But gas stations were out of gas too. So the spike in gas demand, that's weather related. Like whatever blip we're going to get in oil prices, it's going to be temporary. I mean, and what we've seen, and we even saw it in this week's spike up to what we got at like $77 in the WTI. Producers are selling every time it spikes up there, and they're buying down in the 66, 67 price range. So we've been locked in this range for a long time. The other thing is, like, the Fed's not going to get back into it. They're not going to start raising interest rates again. They might they might pause their rate cuts, but they're not going to go back into a rate hike. At least I don't think they're going to go back into a rate hike mode. And if they pause their rate cuts, I think it's only temporary. Look, the situation is still I believe the situation is still as they've been laying that out for a while now. Fiscal drag is increasing from rate cuts all around the world. I mean, we see China, by the way, China's bazooka, right? Rate cuts and just piling reserves into the banking system. The Chinese market is still going down, all right? We have rate cuts all over the world pretty much. We got the Bank of China, we got the Fed, we have the Bank of Canada, Australia, the Bank of England, New Zealand. I mean, everywhere you look, they're cutting rates. And so what is that? That's like a fiscal contraction. So we got fiscal drag from that. Although, like, it's not felt immediately because you have this whole mindset, you have this whole philosophy that rate cuts are stimulus and they're bullish and everything. So, like, investors see that, Wall Street sees that. They've been completely programmed into believing that rate cuts are some kind of bullish panacea. They go buying, and so we get that initial pop up. But we saw what happens with the rate increases, that it actually resulted in a massive fiscal transfer into the global economy, $1 trillion here just in the United States, not to mention what it was in other places in Europe. By the way, ECB rate cuts, I didn't even mention that. So we're coming into a period of higher fiscal drag. In 2025, as I've been saying, we're going to have even more fiscal drag unless there's some kind of policy offset that comes, and we don't know. We have to wait for the election. We have to wait to see what the economic policy proposals are, what gets passed in Congress, etc. But we have the expiration of the Trump tax cuts. We have smaller increases in Social Security, Medicare, Medicaid, military benefits, veterans benefits. All that stuff is going to be less. All right, so it's like we're definitely going to see a slowdown in economic activity. We may even go into a recession if those factors that I just mentioned are not addressed. So, I mean, everybody's piling into stocks now. You know, again, I'm going to go back and say, like in October 2022, when everybody was dumping stocks, I was pounding the table and telling you guys, this is the inflection point. This is now the time to buy. All through last year in 2023, when it was universally forecast by every economist on Wall Street that there was going to be a recession. I told you guys there was not going to be a recession. This year, I've been saying get a little bit more cautious. Yeah, we've had a big run up. We continue to have a big run up. And so a lot of this, look, there is like you could look at monetary conditions now, and when I talk about monetary conditions, I'm not referring to monetary policy. I don't believe that is that equates to monetary conditions. I talk about I'm really referring to fiscal. Leading fiscal flows are still strong. Net government transfers are going down. What does that mean? It means if I give you $20, okay, and I take away 10 in taxes, you're left with $10, right? Let's say that was last year. This year, I'm giving you $20, okay, and I'm taking away $12 in taxes. You're left with $8. You see what I'm talking about? So what's actually left in your pocket is less now than what it was last year and the year before. So, like, that's a thing, okay? That makes a difference. And that that continues to, that differential, okay, 20 minus 12, soon it's going to be 20 minus 14, soon it's going to be 20 minus 16. That differential makes a difference. It means, like, it's what's left over in your pocket as deployable funds. Okay, that's like energy. That's like buying power. That's physics, man. I mean, you have to understand that. So, like, that's what I'm looking at. Yeah, the leading flows, people put that's driving stocks, because those leading flows, that's the $20. Hey, I'll put that into the stock market, but now I only have $8 left for my other stuff. The economy is not about the stock market. It's about what we produce and consume, okay? And that comes back to that $8 left over in your pocket. Sorry, I got a little sniffles. So you got to pay attention to that. Now, this is not something that's, overnight it's going to make a difference, but over time. And I like, my whole thing that I've been telling you guys is the macro perspective. Like, remove yourself from the minutia. Remove yourself from the noise, this kind of micro fluctuation. Step back, get a sense of the big picture, the macro picture, like what's going to happen. That's how you have to position. That's how big wealth is created. Like you have to have a vision. You have to see the big picture. It's not created by these little jumps, here and there. You might be lucky and very savvy and be able to make some kind of cash flow for yourself. But if you want to accumulate wealth, if you want to build wealth, you have to have that big picture. Look at Warren Buffett. He's been raising cash for a long time. Is somebody going to criticize this guy? What is he, like the fourth or fifth richest person in the entire world? And he never invented anything. He never created anything new. He basically just bought and held stocks. So pay attention to this, folks. And yes, I think the bond trade that's the place to be. I personally like the fact that the speculators are selling heavily. And yeah, they have an impact in the short term just from the pressure of their sales. But that creates opportunity. That creates value. All right. It's like I always say, I never can understand investor behavior because consumer behavior is really savvy. Like as consumers, we don't buy stuff unless it's on sale. But when it comes to investing, consumers do the exact opposite. Not me and hopefully not you folks who follow me here on this channel. But most investors, when they see things going up higher and higher and higher, it's the FOMO response, fear of missing out. They want to get in. They pay higher and higher prices. Like to them, the higher it goes, the more attractive it is to them. I can't play that game, and I hope you can't play that game. For me, I'm looking for value. What did the Rothschild once said, I buy low and I sell high. There's no logic more basic than that. And that's how as far as I'm concerned, that's how you have to look at it. If you're into action, if you're into excitement, if you want that dopamine rush, then yeah, have 15 screens in front of your face and look at every single squiggle. It's not what I'm trying to do here. That's not the kind of information or education or understanding I'm trying to impart to you. I'm trying to make you understand, here's how the economy works. I saw something that Elon Musk, who's, arguably a major genius, he said if he was in charge, he would cut 80% of the government. And that sounds really good. And most people would think, oh, yeah, that's what it needs. And believe me, I'm not for government. But he doesn't understand that government spending is the second largest component of our economy. And it really is the first largest component when you think about the fact that it puts the dollars in the system for people and firms to be able to, do commerce. And if you cut 80%, we are in a long-lasting economic depression. I wonder how Elon Musk would feel if we said they should cut 80% of the customers to Tesla. Tesla would be bankrupt, finished. It's the same situation. He doesn't know what he's talking about. It sounds good on the surface, but if you're going to do something like that, you need to have a replacement for that 80%. Where's it going to come from? Japanese buying our stuff, Chinese buying our stuff? Yeah, if that was happening, you could do that, but they're not doing that. It's the opposite. It's the other way around. We have a net outflow to those people. So he doesn't know what he's talking about. It sounds good on paper. It's very populist sounding. It's very like we hate the government, and I'm not for the government. This is not an argument by me for the government, but it's not going to work. He doesn't understand, all right? He understands lots of things. He's a smart guy, but he doesn't understand that. Anyway, that's it for me today, folks. Tomorrow, I'll know more, hopefully, about my situation over there. I hope I still have a house. And please like and subscribe. Thank you for all your support that I've been getting. I really appreciate it. And don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. See you tomorrow. Bye.